ticker PBR, and the truth behind this 64% dividend yield. Welcome back, guys. This is aka Spencer Dunbar, and we are on another episode of 5-Minute DD. This is where I jump in, do a bunch of research on a company, on a stock, on an ETF, ETN, and then I throw all of what I want to know before I were to purchase it into this data sheet on my left here. And we're going to talk about the share price. We're going to talk about everything in this video, and I'll let you know if this is a legitimate dividend by the end. But of course, always do your own research if you're going to buy a stock. Don't believe everything you hear on the internet. So PBR, this is a Brazilian petroleum company. I'm not going to try and pronounce the name because I'll butcher it, but jumping into the pros right off the bat, it is a 63.7% dividend yield. That is remarkable. It is a pro, but it is definitely also a con in my opinion because it is not sustainable. But let's jump into their dividend history and talk about how they have paid this out. Now, looking back, they went from paying yearly dividends all the way. It's just a mess. I'll be honest. It's probably one of the messiest dividend histories that I've seen, and that it's just rough. So it looks like they were paying quarterly dividends with special dividends, and then they switched and started paying only yearly dividends for 2013, 2014, cut the dividend altogether 2015 to 2020, and in 2021 started paying out again quarterly. So I don't own this company. I'm not saying you shouldn't buy it. I'm not saying you should buy it. That dividend history should scare you if you are a long-term investor. This would be the first thing that would rule this out besides the high dividend yield. So looking at deeper into the more recent dividends, we can see that they paid out, actually it doesn't even show their annual payout, but we can do the math. In 2022, $1.20, almost $2. Wow, almost $4. I'm estimating, don't do the math on me. About $4, which is remarkable. And the share price currently sits at 10, so that's how you're getting that. I guess it would actually be about a 40% yield, a little bit lower. But they have paid out special dividends as well. All of that is being factored in. It's just all over the place. Now let's look at that at the history of the stock price. So we're sitting at $10.13 right now, having a really bad last couple of months. Since November, it's down 28.5%. A lot of stocks are down. ABR is down, and that's one stock that I absolutely love. So another dividend yielding stock. I actually don't mind their chart, and I'll tell you why. The post-pandemic boom. So if we look at, let's go back to the 5 years. So they dropped off like crazy when the pandemic hit, from 15 down to 485. So if you want to scoop this up even then, even with how risky and the no dividend yielding, you'd still be up 223%. If you sold at some of the highs, if you held till now, still up over 108%. So it's had a really good run lately. If we look at the max chart, we can see that it has been devastated when the market tanks. Now, one really important thing to note is when it does tank, it typically rebounds. So we can see it tanked from over $60 here, fell 65%, and then with the next span of a year was up another 170% before falling like crazy. So the stock really fluctuates with the market, but they did boom really nicely after the pandemic and have apparently been doing really well, partially because their dividend yield is so high. They've been paying more money out to shareholders. Next, the future of natural gas consumption. So let's jump into their presentation. They have a bunch of stuff in here. I pulled one of the slides I want to talk about specifically, but they are really big on renewable energy. So it is a petroleum company. They are working on refineries, being better at refining the fuel they have, what the water they're using. It all goes, honestly, it goes pretty far over my head, besides the math numbers of the money that they're making and whatnot. But they've been doing well, and I do like how they're really focusing on conservation. That is definitely something that people look for when buying into these larger stocks. Whether or not, the big guns, all the really, billionaires do it or not, it's a good sign to me. Next, it is beaten down but has a good long-term chart. I kind of talked about that. Pretty insane that the dividend yield is doing so well and that the chart looks as good as it does, but it is just too skeptical. So let's talk about this chart that they actually had in their investor relations presentation. So $60 billion target achieved 15 months earlier, which is extremely impressive. Meeting guidelines, meeting goals 15 months in advance is pretty wild. 54% of the debt after 2027. And actually, let me just jump. There's a lot in this. One of the most important things, because interest rates are going crazy lately, is that there was a 68% reduction in their interest expense over the last 5 years. What that means is, so they're paying interest on loans that they have, and with interest rates going up, whether they be fixed or flexible loan interest rates, it's good that they're paying off this interest. So they paid off $5 billion in just the last span of 4 years. Very impressive. Once they get that debt down to nothing, it's definitely a more desirable company, but as of now, they are still $2 billion in debt, and they are still paying interest on that. But they've been making some plays. I'm not going to lie to you. They've been doing some things very, very smart, and I do think that's great. Dividends, let's see, the optimization of cash levels and dividends. This is important because I'm a dividend investor foremost. Dividends they paid $13.80 per share declared in 2022. So that's why the dividend yield is so high. I'm not sure where that last amount comes in from. This may not be accurate. They may not have the full thing. Maybe they paid out a dividend in December. But absolutely impressive. Insane, to be honest. You're looking at over 100% yield. I'm not sure. Like I said, I'm a little bit skeptical about this because it's not on the dividend websites I found, but they might not be as accurate. So now let's jump into the cons. We've kind of danced around a lot of the cons already, but we'll talk about it. Follows market drops and runs like crazy, as we've seen. If you think the market's going to go up, maybe it's not the worst idea. It could stop following the market trends. The market could go up. People could say, I'm not buying this, and it could go down. It's just in the past followed the market relatively well, at least on the dramatic moments in the market, the runs and the dips. The dividend is not sustainable. People might say it is, but there is no way you can pay out almost over half the money that you're making into a dividend. I just don't see how they could do it and continue to grow the company and work on it. Maybe they could. I have not seen it done yet, but similar to Zim, it just doesn't make a lot of sense. And so therefore, that's why I'm not buying this stock. And then bad dividend history, like we talked about, like we saw. Terrible dividend history. Probably one of the worst that I've seen. Maybe they can make a change, and from here on out, they'll be more consistent. Who knows? Only time will tell. So that is 5 minutes of DD on PBR. Probably a little more than 5 minutes because I always go over. But I appreciate you guys for watching the video. If you could like this and subscribe, that would help me out a bunch. I will do more 5-minute DD videos on stocks of your choice if you comment them down below. So far, I haven't missed a comment. So let me know what videos you guys want to see. And hopefully you found some content or some of this stuff enjoyable. All right. Hope you guys have a good rest of your day.